Hello, everyone, and welcome to the High Velocity Partners podcast. This is Paul Montalongo and
Letitia Montalongo. I can say my name. Hey, guys, thanks for joining in. Today we have with us Courtney Moeller, and we're so excited to have her here today. She is going to be speaking all things oil and gas and letting us know how she got into this industry. Courtney?
Oh, well, thank you so much for having me. This is such an honor to speak with you both. You're both incredible people, and I'm just excited to see you.
Yeah,
that's nice.
Hey, yeah. It's always good to see you.
Yes. Okay, so how did I get involved in oil and gas? That's a great question.
Yes, thank you for asking the questions that we need to ask.
Yes,
we're familiar with your story, but it's really quite interesting. So share.
Yeah. You know, I feel like, life has led me down some strange paths and some exciting ones. And, I'm originally from West Texas, which is Midland. And everybody in my family has been involved in oil and gas in some aspect or another. My dad was a petroleum engineer. My brother drilled oil as well, but he started out on the rigs as what they call a worm, which is like the lowest of the low. And then you have to kind of work your way up the ladder. And my uncle has a well servicing company. My sister hauls water. So it's definitely been a very family involved industry for us. And so about 12 years ago, I inherited my dad's oil and gas company, and I got kind of thrown into the deep end on that, but it has been really fantastic. It's offered a lot of opportunity for my family that, we didn't have before. And really, gosh, when I learned about syndication and, real estate and all of these asset classes, as I was looking to diversify my portfolio, I figured out that the tax benefits and cash flow that you get from oil and gas pair very well with real estate and things like that. For me, it's all about the velocity and momentum of money and compounding it quickly so you can build wealth faster. And I feel like oil is a perfect vehicle to help make that happen.
Yeah, so we do most of our investments in real estate. So what I do love is that just recently we have kind of been introduced to oil and gas. And really the things that I didn't understand were really like the tax benefits, because we thought as real estate investors that we were just doing great. We're like, we have all these deductions that we can take.
We have the corner on the market on tax benefits,
right? We can do bonus depreciation. We can offset all of our taxes. But then I hear like, oil and gas is even better. So tell us like what that looks like for you.
No, and that's such a great question. It's a huge benefit that most of my investors come in for. I have a lot of high income earner, high net worth people that have either a capital gains event or they have a high W-2 job. And the great thing about investing in a working interest in oil and gas, and that working interest is the key, because you can invest, you can have royalties or stocks or things like that, but that's not going to get you the tax benefits. It's got to be a working interest that you get when you're drilling those wells. So the great thing is that it can offset any of those incomes. You get it in year one, and it depends on the project, but like ours, we offer anywhere from 80 to 90% depreciation. So if you invest $100,000, you're going to get anywhere from $80,000 to $90,000 reduction in that income in that first year.
Are y'all hearing that?
Yeah, it's huge. So, if you make $500,000 a year, you make $100,000 investment, that will reduce it. Let's call it an 85% depreciation. So now your taxable income is $415 instead of $500. And that translates to roughly $32,000 of tax that you are now not going to have to pay, that you can deploy into another investment opportunity or pay for college or whatever it is that you're needing. So huge. And the other great thing is you get a depletion allowance off all future income. What that is a 15% reduction in the amount that you're paying on taxes that you make from the production. So for the life of that well, every year you're only going to pay taxes on 85% of the money that you're making. Huge benefit as well
on that investment.
On that investment.
Yeah, that's good. So let's talk about some of the risk. Obviously, with all investment vehicles, there's risk.
Yeah,
so
absolutely.
If you're new to oil and gas and you're thinking, okay, this sounds great, which it does. So what's the offsetting risk that one has to think about in oil and gas?
This is the tricky part. I have been very fortunate to be involved with major players, Chevron, Continental Phillips, Conoco, just a lot of the big oil and gas companies. And that's who I like to invest with. The problem is these multi-billion-dollar companies, they're not looking for private capital. And so we've got a lot of smaller people out there looking for money, which is great. The problem is they don't have the deep pockets that a lot of the oil, the bigger companies do. So, gosh, let's talk about those risks. First of all, with some of these smaller guys, you can end up with capital calls if they break drill bits, which they're going to, or if they need to what's called tripping pipe. They need to pull all that pipe out of the ground and replace it. That costs money. So you need to make sure that you have an operator that knows the area they're drilling in. Drilling a well in West Texas is going to be different from drilling a well in Wyoming, is going to be different than drilling in Louisiana. And so the way I like to explain this is, when you have doctors that are surgeons, you can have a general surgeon and he can operate on pretty much any part of the body, which is great. But if you need a heart transplant, you want a specialist that knows how to deal with the heart, right? You want a cardiologist. Sure, the general surgeon could probably do it, but you want somebody that knows what they're doing. It's the same thing. If you're drilling in certain areas, you want an operator that knows how to drill in that area. The ground underneath, the rock and the terrain is going to be different everywhere, and it causes different problems. So that's one thing. You want to make sure that you're with an operator that has experience in the area they're drilling. The other thing you're looking at is anytime you're in that drilling process, there can be delays. You need to make sure that you're in a proven area. You do not want to go and be the first ones to drill in a new area that does not have proven oil reserves. So you need to be in a proven area. And then you also need to make sure that if they do find oil in whatever they've drilled, they have a way to pipe it out. Is there pipelines in place? What's going on with that situation? So another thing is the price of oil matters. It's going to affect your returns. So you can have a really great project, but there's not ever going to be any guarantee of how much oil is in the ground. And you need to find out what the break-even price for this project is. So we generally kind of live in the $35 to $40 price per barrel for oil. If we drop below that for a significant amount of time, that means that we might not be making enough money to cover the monthly operating expenses for those wells. And so you need to find out, what is the contingency plan for that operator if that happens. Generally, the companies that we're working with, they'll shut those wells off until the price of oil moves back up. So we're not just cutting checks and, incurring all of these expenses and not making any money. So break-even price matters, location matters. Just like real estate, just like real estate, location and operator matter. Those matter. Track record matters. So it's the same thing.
And then like the overall market as
the overall market. Yeah. Like where are we headed? What is this, economic forecast for this next couple of years? Because when you're drilling new wells, a big portion of your return comes in that first couple of years. So what does that economic outlook look like? Obviously nobody can predict the future. Things happen, COVID happens, the prices crash during that time. So, but it's important to know what is going to go on. Really, the first year is where you're going to get a lot of your capital back. So definitely take a look at that. I always like to look at what are Berkshire Hathaway and, some JP Morgan and, where are these guys doing? And, here recently we've seen a lot of movement from these big financial companies into oil and gas. Well, that's a really good indicator that they've got a really good outlook on that for quite some time. So I like to look at that for sure.
That was my next thought is like, okay, so what's the outlook and what's the typical timeline of an investment? How long? And then what does your crystal ball say about like the future of the next 5, 10, 15 years?
For sure. Well, and let me point something else out. So these working interests and ownership are recorded at the county level, just like real estate is. So if you're looking, you need to make sure that the deal you're investing in, these people actually own that interest, and it's verifiable at the county level, which is a third-party governmental, agency. And also, every single state has a third governmental agency that maintains all of the oil and gas information. For Texas, it's the Texas Railroad Commission. For Wyoming, it's the Wyoming Oil and Gas Conservation Commission. You can go on there and you can look up wells by operator, by name of the well, by API number, and all of that information, the API and well number will be on that county recorded document for those wells. You can pull that up and make sure that the operator that they're saying is running this actually does have the rights to that well, that they actually did. You can find out, when the permits were approved for drilling. You can see when the date it was spud, which is the date they broke ground and started drilling that hole. You can find out if they are planning on fracking it. Tons of information. The depth of these wells, the latitude and longitude, and all of the production for it will all be maintained on that website. So you can actually compare your distributions to what's being paid out by the person you invested with.
Nice, nice.
That's
And
super, super interesting.
Yeah.
and the duration of these investments?
Well, so that's going to vary by location.
Mhm.
So you've got shale, you've got different formations. Some of these wells are going to be 10-year wells. I've got wells in my portfolio that were drilled 50 years ago. The Wyoming area that we're working on right now, we've got a 20-year projected payout time frame for this. Now, the majority of your income is going to come in, we're going to call it a 7-year time period, but it's still going to pay out. In 15 years down the road, I don't know if your check is going to be $1,000 a month or $30 a month, but I will cash checks at any amount as long as they want to keep hitting my mailbox.
Yeah, but it sounds like it's really front loaded.
It's
like,
really,
like
it's
a
very
lot of your
front
money
loaded.
is back in the front, and then it's
yes.
just free money after that.
Yes, it's very front loaded. You're going to make a significant amount of that back in that first few years, and 2, 3, 4, 5x, whatever the projection is for your investment, and then the rest of it is, I guess after you get your capital back, it really just is mailbox money.
Yeah.
But after that 7 to 10-year time period, I don't really know what that will look like, but everybody loves mailbox money.
Sure.
No, that's awesome. If you guys want to learn more about this, she is going to be attending our investment summit that's coming up in November. So make sure that you click the link below and check that out. Courtney's going to be speaking, and she does know all things oil and gas. So make sure you hit the link and get involved with us.
Yeah, it would be a deeper dive at the retreat.
Yeah, for sure.
And examples, case studies, and just like we'll really be able to pick your brain there.
No, it'll be great. I'm really looking forward to it. A lot of people don't realize that they can get the kind of tax benefits with oil and gas. Plus, the cash flow is really substantial. It's substantially different than real estate. I like that because it helps with strategy. You can take $100,000, put it in oil and gas, get it back hopefully within that first year, and then turn around and redeploy it into real estate. And now you have funded 2 deals within a pretty short time period. So no, we will get into all of the things. I cannot wait. Y'all have put together such an amazing lineup of speakers and people, and I'm really honored that I get to be a part of it.
Well, thank you. Thank you for being here today and for the short course in oil and gas.
Yeah.
And like Leticia said, click the link below for more information about the High Velocity Partners Retreat in Costa Rica in November. We'll see you there.